Hello, in today's video we'll be taking a look at the Wednesday, March 18th, 2026 trading session for the CBOE SPX index. We're utilizing the day trading GPS SPX daily key levels V3.0 indicator, which was just released about 1 month ago. Okay, so today we have the FOMC decision on interest rates. So we're going to have elevated volatility throughout the session. And then we have the FOMC interest rate decision coming up at 2 p.m. That's 2 p.m. Eastern New York time. Okay, so these types of FOMC sessions, you really want to um, be fast on your feet on as far as any trades that you take prior to the FOMC decision. And generally, you want to wait until the conference call starts after the decision. It's typically at 2:30 when Jerome Powell will start speaking then. You'll have a lot of volatility. The 2 p.m. decision typically probably a little more heightened today given the uncertainty of the war going on and the other aspects, oil prices, etc., and seeing what Jerome Powell has got to say about the overall situation, and then of course the 2 p.m. interest rate decision. So we're going to have elevated volatility today, which means that the options are going to be a lot more expensive than usual, as we saw for today's opening candle. Today's opening candle, we have the 9:30 a.m. BBKPL alert that it is closed below, so that is the bearish signal on the opening candle with this indicator for those that like to take the 9:30 a.m. opening candle trade. We also have our ribbon here, one of the two ribbons we've discussed before in prior videos. This one is Annie's ribbon, which, as you can see here, is bearish on this open as well. So that's also giving us an additional confirmation. If this ribbon was sort of in the middle between red and green, then we may want to pass on the opening candle trade. But since it is clearly red as well, then we have additional confirmation on this 9:30 a.m. opening candle being a bearish trade. Now you could also wait until price touches this lower line here on the ribbon to enter the bearish trade if you wanted to not take this 9:30 a.m. candle, but you wanted to have the session play out a little bit more. You could wait for a touch and fall off of this lower level here. If the price had instead started trudging upward and we have half of the ribbon being red and half green, then if you did not take this opening candle trade here and you were waiting, and instead of what did actually happen, that happened, then you would probably want to avoid that trade until we get a clear direction in either way, bullish or bearish. So here we have this opening candle. We have the standard play, which is off of the bull bear key price level. The standard play for that is going to be the option strike closest to the bull bear key price level, 66.9821 for today's session. So that is going to be the 6700 strike is the closest, and that is going to be a put strike since it's a bearish play. The ask price on the 9:30 a.m. candle close on this 2-minute chart time frame, which closes at 9:32 a.m., is 28. The two other options that you have on this bearish play from the bull bear key price level are going to be two out of the money strikes. How you determine that is you look down. We'll move this a little more over. You look down, and from the direction of the trade is down on this bearish play, you look to the first midpoint down, which is this midpoint here, 66.8683. So the closest strike to that is a 66.85. That's going to be your first out of the money strike you can consider on this bearish trade from the bull bear KPL. And the ask price on the candle close of the 9:30 a.m. candle is $21.30. The furthest out of the money one you can consider is the S1 level. It's a little covered up by the candles here, but if we look down here, 66.75.45. The closest strike to that is going to be the 66.75 put strike on this bearish play from the bull bear KPL. The ask price on the close of this candle, $17.50. Now here on this 10:26 a.m. candle, we finally get a hit of the S1 level here. This prior candle before came close but did not hit it. As you can see here, we have S1 in confluence with the pre-market low today. The pre-market low is 66.75.21. The S1 level 66.75.45. You'll also notice up here that we have the PMH and YDH. So we have the pre-market high and yesterday's daily high up here. That's certainly something to look out for later on in the session, that if it blows through that in Jerome Powell's speech or on the reaction from the interest rate. This is a very important confluence of levels up here because it's both the pre-market high and yesterday's daily high. As you can see here, the PMH 67.54.71, the YDH 67.54.30. So those are very close together. We also have YDC and YDL pretty close together today too. So this would be your initial surge up. It would need to get through both of these, obviously going above the bull bear KPL, but most importantly getting above these and then R1. So that's yesterday's daily close and yesterday's daily low. They're not as close as these are, but they are relatively, they're only about 5 points away or so from each other. So that is also an important factor if we get any move to the upside later for it to break both of these as well as R1. Then the next target after that would be R2, followed by these two important confluence of levels here. Now on this hit here of the 10:26 a.m. candle, we have the bid price on the 10:26 a.m. candle close 41.40. For the at the money 66.75 standard play, that's a profit of $1,340 per option on that scalp. Keep in mind you want to be pretty flexible as far as doing any trades early on in an FOMC session. Generally, you want to try to keep your trades confined to scalp onlys on FOMC days prior to the 2 p.m. decision, as that's when you'll get the real action after that. A lot of times prior to the FOMC interest rate decision, you'll see, even though we have a fair amount of volatility today, you'll generally see in most sessions price contained before that, generally in the majority of the FOMC sessions, and then of course after the 2 p.m. interest rate decision and Jerome Powell's speech, that's when things generally start heating up in the majority of sessions. Okay, so our exit here on the S1 scalp, it's the scalp trade exit because with this indicator, if you're doing a scalp trade, you're looking for a one level move in your favor. That is calculated by the level that you're taking the trade off of, the level that the trade is based on. In this case, the bull bear KPL, it's a bearish trade. You look for the first full level down, that is the S1 level. The midpoint levels and the QL levels serve different purposes, so you're looking for the main key level, which would be the S1 level. The main key level after that is going to be the S2 level. The mid S1, S2 would be your minimum target on this particular trade if you were doing a regular trade. If this was a normal session and not an FOMC session, then we'd be, for those inclined to look for a regular trade, then that would be your target. However, on FOMC days, it's generally considered better just to do, if you're going to be trading at all, before the FOMC decision at 2 p.m. Eastern New York time and then the speech at 2:30, that you generally confine your trades to scalps if you're going to be trading at all before that. After that, it's a completely different story. Okay, so here we also have the 66.85. That was our first out of the money strike. Consider on this trade, bid price on this 10:26 a.m. candle close of the scalp hit 31.60. That is a profit of 1,030 per option. And then finally, the furthest out of the money, 66.75, a bid of 25.90 on this 10:26 a.m. hit, and that is a profit of $840 per option. So if you are trading at all, it's generally advisable to confine your trades, like I said, to scalp onlys on anything prior to 2 p.m. on FOMC days. After that, you still need to be extremely cautious. You're going to typically get some pretty wild volatility in both directions. You're going to get some fast whipsaws generally. So you need to be extra cautious if you are going to be trading at all. It does provide a lot of opportunity typically after the FOMC interest rate decision and during Jerome Powell's speech, generally in most sessions that involve FOMC decisions and the conference call thereafter, you can get some extremely wild swings back and forth. So it does provide a lot of volatility and opportunity for trades after that. Okay, so for those of you who are interested in purchasing this indicator, I would recommend that you look at our other session videos on SPX to go into more detail about this indicator, what all the different levels mean. Today, we're not going to go into all that. You'll find the links to other videos, including an overview of this indicator, the new features video of this indicator, as well as longer SPX session videos, which would go into more detail about the daily key level strategy, what all the different levels mean, and further details about how to trade with this indicator. You can find that in the YouTube description. There's also a Google Drive link in there, which has links to other specific topics on this indicator as well, so you can look at that. And if you are interested in purchasing this indicator, you can email us at daytradinggps@gmail.com to request a discount promo code for purchasing lifetime access to this indicator. We do offer currently quarterly access plans, annual access plans, as well as lifetime, one payment for lifetime access plans on this indicator. Now, for those of you wondering, well, how does this indicator work for other people, all the people that have purchased it and using it on a daily basis? And we're going to now show you screenshots of trader feedback using the daily key levels indicators that you can see, and you can also see the reviews for yourself if you'd like to just go straight and look at the reviews on your own time at the link for the indicator, which is also in both the YouTube description as well as the pinned comment to this video. So thank you for watching this video today and taking your time to do so. If you did like the video, please hit the like button as it helps us with the YouTube algorithm, so we'd appreciate that. And then if you would like to subscribe to be notified of other videos when we post them, you can certainly subscribe to our channel. We'd appreciate that. We are going to start posting more videos on our other daily key levels indicators. We're just about to release our V3.0 version of the Stocks ETFs indicator this week, and then we will start posting a lot of videos on that indicator after we've released it. Followed by in the next 2 to 3 weeks, we will also be releasing the V3.0 versions of our futures indicator, which is for trading futures as well as Forex CFDs. And then we will be finally releasing our V3.0 version of our Forex currency pairs and cryptocurrencies in the daily key levels indicator. And then we will start posting videos on trading with that as well. So again, thank you for taking your time for watching this video today, and we wish you prosperity in all your future trading. Thank you. Okay, so for those of you who might be wondering, well, how is this working for people that have purchased the daily key levels indicators? You can go to daytradinggps.com and look at the user reviews and feedback. We've just taken some of them here and highlighted parts of them, but we invite you to go to daytradinggps.com and look at the reviews and trader feedback on our various daily key levels indicators, including the SPX daily key levels indicator. Thank you. Just a quick note, if you are interested in purchasing this indicator, in return for you taking your time for watching this video, you can send us an email at daytradinggps@gmail.com to request a discount promo code to purchase the indicator. Thank you.